Alright, what's going on, guys? I sent you guys an email telling you that I was going to send you an email, send you a video about, tax write-offs and stuff like that, especially since we're getting close to that season. January 1 already hit. Happy New Year's, by the way. And, so I just want to help you guys. I've been getting my own mind in track with as far as, getting prepared and getting focused for 2014 as far as keeping records and taxes and paying attention to this stuff, especially as it relates to, home-based businesses, internet-type businesses. So I just kind of wanted to share that with you guys. So a couple of things we're going to be going over. We're going to go over the top 5 write-offs, and these 5 write-offs are the biggest ones. I mean, there's a lot of other ones, and I don't want to get too technical in here. This is basically just a summary just to kind of get your mind going. Kind of just push you in the right direction on where to go and what to start looking for, so you can start planning, whether it's your real estate, your preservation of wealth business, which is another thing. I'll talk about write-offs that are specific to preservation of wealth. You know what I mean? That you guys make sure you get that in order and keep that documented, so that way you can get some write-offs on that. And then I'll end up with resources. Just different resources on learning more on taxes. You know what I mean? So. But starting off, first off, you got to find a CPA that knows what he's talking about. All right. Some of the stuff we go over here, you might run by your CPA, and he might, like anybody else, feel threatened because he's clueless on what the hell you're talking about, or he's just not familiar with it. So he'll say, "Oh no, you can't do that. That'll cause you problems. That'll get you audited," or they'll come up with excuses when they're not intelligent. So, in order for you to find a CPA that knows what he's talking about, well, you're going to have to know what you're talking about first, right? So educating yourself is going to be first and foremost, and knowing what to look for and knowing what to talk to this guy about. So that way, when you shop around or you test your own guy, you kind of got an idea of where he's at. You know what I mean? And you might have a guy who's clueless or close to clueless, but he's teachable, and he might be like, "Oh yeah, no, I didn't even think about that, or I heard about that, but I never did that. So yeah, let's try that." And that might be somebody you might want to work with. You know what I mean? So anyway, you got to check that out. You want to get the right mindset, all right, and make things happen, all right. So taxes are only going to get worse as history progresses, all right? Every year is going to get worse and worse, but the same people who write these tax laws are the same exact people who write these loopholes because they need to protect their own money. They need to protect their own wealth, all right? So they're not going to, the IRS doesn't broadcast this stuff out there. You're not going to be able to find it. You're going to have to educate yourself, you know what I mean? And finding CPAs, which is a certified public accountant, finding accountants and finding lawyers and finding people that are actually researching this stuff and educating yourself is going to help you stay abreast, because believe me, the more aggressive these tax laws get, the quicker this stuff's going to change, and the more you kind of got to stay on top of it. All right. So, but getting in the right mindset. Some of the stuff I'm talking about as I go through here, you might be thinking, "Oh, well, I can't log that many hours, or I can't do this, or I can't do that." One of the focuses points of this video is for you to get your mindset right on what you need to do. It's a must, man, because taxes is your largest expense, bar none. And I'll probably say that a couple times during this video. Taxes is your largest expense. So if you don't set yourself up right initially, to be able to write off a lot of stuff and to get deductions, you're just systematically, year after year, you're gonna get raped more and more and more and more. All right, so get the right mindset. All right. This is going to help you. Have more money left at the end of the month instead of more month left at the end of your money. All right. So that's the whole main goal here, is to just take advantage of every single deduction that's available out there, so that way month after month you got more money that you're keeping. All right. So. Taxes, like I said, man, taxes are the largest expense. If you take your housing, if you take your food, if you take your health care, your transportation, you take all that and combine it, your taxes are more than all of those things combined, believe it or not, all right? And, taxes are taken out of your check before you get it. For us employees, W-2 employees, they're taken out before you even get your check for a reason, because that whole system leaves people's brains numb to the fact that they're actually paying, how much they're actually paying in taxes. And listen, if you had to sit down every month, like you had to pay your Verizon bill, or like you had to pay your cable bill, and you had to sit down and write a check for every tax that you get taxed on a monthly basis, you would lose your mind. And the government knows that if everybody had to do it that way, that there'd be a complete tax revolt. So it's specifically designed to be sneaky, man. That's what you need to pay attention to. It's systematically designed to be sneaky, to take as much money as possible from you without you knowing any deductions and without you even realizing how much is really being taken out of your account. How many of you guys actually sat down with your W-2s, and some of you might have, with your W-2s, your pay stubs, all that, and actually figured out how much is being taken out? I mean, it gets ridiculous when you break it down. I've broken mine down, and I don't even pay that much because I got 3 kids. I got a wife who don't work and 3 kids, so I don't even pay that much, you know. But guys like my brother have broken it down after I pushed him a little bit, and he could not believe it how much he spends in taxes. I can't believe he pays more in taxes than I make in a year, man. It's crazy. But anyway, he ain't got no kids or nothing. But that's the reason why they take the taxes out like that, all right? All right, you don't have to wait for a tax return to get your money back, all right? And I'm going to explain some of that more. So some of these steps that you could be taking to start saving money back, you don't have to wait till your tax return. You can start getting money next month, the month after next, right away with these deductions. And I will talk more about that at the end, so just stay tuned for that. But anyway, a write-off, or an aka a deduction, a write-off deduction, same thing, is only for the amount paid in taxes, right? Some people will hear something like this and they'll be like, "Oh man, I could make all this extra money a month." No, whatever was allocated for you to pay for the year, that is what you're going to be able to deduct. So if at the end of the year, if you owe $10,000 in taxes, then you have $10,000 that you can write off. If your expenses exceed that, you're not going to get more money, all right? You could for credits and stuff like that for kids, but that's a whole other topic. But basically, your deductions and your write-offs is for what you pay on a monthly basis. So if you take all the taxes you paid from your department, police department, whatever it is, and the military, you take your W-2 and your deductions, you take those numbers, those numbers summed up at the end is what you're going to want to come up with deductions for the end of your year and have record keeping for that, all right? So that's that. So basically, in essence, you could pay no taxes. You can pay no taxes, 0 taxes, if you have the deductions that match the amount that you owe in taxes. Okay, so your deductions on a home-based business, they could be amended 2 years back. So let's say you're like, oh, you know what? I kind of been doing this stuff for 2 years, which most of you have and I haven't. But anyway, you could go back 2 years and claim that. Not only that, let's say you have a lot more write-offs then you can write off because you didn't make that much or you didn't pay that much in taxes. Well, if you save that, you can write stuff off up to 20 years in the future. And again, most people have no idea. So let's say this year you have an astronomical amount of write-offs because you spent so much money getting started or spent so much money doing stuff. Save all that because 5 years down the road when you don't have enough, you could use that. All right? So that's a key to record keeping too. And most people won't tell you that. And most CPAs don't even know that. Or won't explain that to you. All right. So the largest tax deductions in America, okay, the largest tax deductions nationwide belongs to home-based business owners. All right. It's specifically designed like that. All right, because a lot of these guys that write the rules, this is their huge loophole that's not broadly advertised. All right. So I mean, you're deducting things you're already spending money on, and that's what I want to stress, man. Most of the stuff, all of the stuff, most to all of the stuff that you're going to be deducting, it's stuff you're spending money on already, okay? And all you need to do is learn how to properly document it, which is very easy, which we'll get into more at the end. But you're able to deduct stuff you're already spending money on. It's not like you're having to spend more money to save some in taxes. This is saving money without spending an additional penny, all right? So the 2 basic rules to qualify for a home-based business. Here it goes. Real simple. All right, you want to know how you qualify for home-based business? Number 1, you have to work on your business on a consistent basis, all right? As little as 3 to 4 hours a day. I've heard some say around 10. There's really no set hours, okay? It just, the tax law states that you have to work on your business on a consistent basis. So you put in 45 minutes to an hour a day, that's considered enough, all right? There was a lady that went to court and fought, and she won, only putting 45 minutes in a day, which turns into like 3 or 4 hours a week, and she won, all right? So you're going to want to, that's it. That's number 1. You gotta do your business on a consistent basis. Now, doing your business can consist of a bunch of things, man. Get creative. It could be researching, right? You guys are spending time looking on the internet about gold and silver. Boom, that's part of your business. You're researching, all right? It doesn't have to necessarily be an income producing activity, okay? You just need to be spending that time. You're listening to a email, you're watching this right now, it doesn't matter. You just have to log it, and you can put it in, you can get credit for it, right? So, and you must have an intent on making money. Duh. Well, that's the whole point of it. But this separates like the people who try to write stuff off on a hobby. So this is the difference between a home-based business and a hobby, all right? A hobby, your intent is not necessarily to make money. A home-based business, all you have to show is your intent that you want to make money. You could show losses year after year. There's no time frame. Some people will tell you that, if you don't make money within 3 years, then you're not going to be able to have these write-offs. That's not true. As long as you show that your intent is to make money. Now, if you're not making money after 3 to 5 years, then there's something wrong with what you're doing. That's not the whole reason why we got into a home-based business to begin with. But those are the two main rules that qualify you for home-based business. So it's very simple. All right? So here goes the top 5 real quick. All right? The top 5 deductions, all right? Number 1 is your home. Your home. A home office, right? So all you need to have is an exclusive portion dedicated to your business. You don't have to have a dedicated room with nothing else in it. You just need to have a dedicated portion. So if you have a quarter of your living room is blocked off, and this whole portion is solely dedicated to your home-based business, because you have a desk there, you have your computer, your laptop, you have files that you keep there, you got your records that you keep there, whatever, you got your books that are related to the business you're in. Bottom line is, as long as you have an exclusive portion dedicated to your business, you're good. All right. Now it's based on a percentage of space used. All right. So if your portion dedicated to your business makes up 10% of the square footage of your house or your rental, whatever your situation is, then you can write off 10% of your mortgage interest, your rent, your property taxes, your maintenance fees, your electricity, your water, all your utilities, all your upkeep, all of it. All right. So the bigger the portion of percentage, specifically and exclusively dedicated to your business, the more of your house you can write off. Like I said, man, get creative. This could be a huge dollar amount on a monthly basis, man. My mortgage for my house is, over $2,000 a month, all right? So, if I can write off all my utilities and I can write off all this stuff, a percentage of it, I would dedicate 30% of my house to the business, to the business. You get what I'm saying? So, and for record keeping, it's good to have like a photo of a video of your workspace. In the event you do get audited, you're prepared. Not necessary, and even if you have that, you don't need to send the photo or video to the IRS. They don't want any of that, all right? And then you just log your hours on what you spent doing, all right? So, very simple. Like I said, man, a lot of this has to do with you getting creative, all right? Your vehicle. So that was number 1 was your home, right? And that's a huge one, man. Next huge one is your vehicle, all right? So again, this is also based off of a percentage of usage towards your business, all right? So if you use your vehicle for, say, 30% of your business, you can write off 30% of your car payment, 30% of your gas, your insurance, your maintenance, and the record keeping with that is relatively simple. You just need to keep a record of the date, the destination, the purpose, and the mileage, okay, in order to qualify. So again, a percentage of your vehicle. So how much of a percentage of your vehicle does it take? So let's say you take a 2-3 hour drive, or you drive an hour, or you drive here, you drive there to go speak to somebody about preservation of wealth, or to go learn about gold and silver, to go to learn about a home-based business. Listen, you can get creative, man. As long as you're documenting this stuff, you can write off whatever percentage of the vehicle you used. You can write all that off. You got a lease, same thing works. Now, most of you guys don't have kids. Some of you do. All right, this one is a huge one. And even if you don't have kids, remember, this is all this is a sales pitch in and of itself, man, with the type of savings you can get here. So if you're talking to people, family, relatives, friends, people you meet that are interested in gold and silver, you're talking to these people and they got kids. This is a ringer right here, man. You can hire your kids at 6 years old. At 6 years old, you can hire your kids, right? All the wages that you pay them are deductible to you. So let's say you pay whatever it is you pay your 6-year-old, all that money that you're spending to pay her, you get to deduct that on your own taxes. How crazy is that? And the income to a child is tax free, up to $6,100 per child per year, tax free. Okay, so that's a little over $500 a month to each child. All right, to each child. Tax free. I mean, you get where I'm going with this, man. That is ridiculous. That is a crazy amount of savings. And some of you guys might be thinking, oh, I'm not going to pay my kid $500 a month. They're going to be buying junk. No. You got to twist it, man. Congress said that that the parent is the one that controls the usage of the money. A minor can't control the usage of the money. You get what I'm saying? So for me, right, I got my USAA account. I got accounts for Destiny and Justin, my two oldest. My youngest is over 6 already, so she's in the ball game. She's an employee already. But so my two oldest are I have their like kid accounts, teenage accounts they call them, and I control them. They don't have access to that stuff. So if I put money in that account, they have a debit card. You know, I can give them a debit card if I want. But they can't like log online unless I give them the PIN code and control my funds or anything like that. All that money is used by me, and there's nothing wrong with that. So again, $500 a month per child. Listen, man. This goes to their food. This goes to their clothes. This goes to their school. So listen, this is stuff you're already spending on them. Their entertainment, you taking them out to the movies, whatever it is. So all this money, as long as you're allocating it with a separate account and you're taking that money out monthly and you're putting it in that account, and this is their salary, all right, $500 a child, monthly salary. Okay, now that money gets used for their food, man. You go to the supermarket, that gets used for their food. They need sneakers, clothes, this goes out to their clothes. So listen, you're already spending that money on your kids, right? But you're spending that money after it's already been taxed. Now you can use that money and it's tax-free. And you get to deduct it at the end of the year. I mean, that is massive, dude. That is huge. So for me, right, I got 3 kids. So for me, that's $6,100 a year per child tax-free. You know how much that is? That's $18,300 a year. I can set aside tax-free, because that's the salary I pay to my children, and all that money, not all of it. You know what I mean? I mean, obviously, if they're doing work for me, which they will be, I'm not talking about running a scam here. You know, I'll have my two oldest managing my website and doing stuff for me and keeping track of emails and stuff like that. My little one could, lick stamps and put them on envelopes. She could be my paper shredder executive. You know what I mean? And that's legit. That's not like running a scam or anything like that. And yeah, I'll pay them, but a lot of that money, again, I control the usage of that money because they're minors. Guess what? Most of that is going to go to their food, their clothes, their entertainment. They want this, they want that, they want to go here, they want to go there. That money I'm already spending is going to get dished off to that. And then, and then we'll figure out whatever they're going to keep. But anyway, keep that in your mind. The more kids you got, the more crazy it can get, as you see, all right? So that's a huge one, hiring your kids, all right? That was number 3. Number 4 is business travel. Now, as long as part of the trip is business related, you can write off the whole airfare. As long as part of it is going to be dedicated to business. So let's say you're flying to wherever. I'm going to Hawaii to see my mom, right? I'm flying Space A, so I really don't have nothing to write off. But anyway, if I was paying for that flight, guess what? Mommy's going to get a conversation about gold and silver. You see what I'm saying? Now that whole entire flight is written off. Now I'm not going to be able to write off like my car rental and my hotel every night. I can write off a portion of that if I'm using a portion of that, again, a percentage of that revolves around the business, okay? Which is very easy to do, right? Guess what? Mom's coming to the hotel and she's gonna get my personal conference in the lobby restaurant. You see what I'm saying? And some of that bill can be written off. All right. So business travel, as long as like I said, the same principle applies just like everything else. A percentage of your time and events related to the business, goes towards that. And then entertainment and meals, all right? So the rule is with that is 50%. 50% is tax deductible. So let's say when I come back to New York, right? All of us go out, we go out to eat, and we all go to hang out. let's say if I pick up the tab of everybody, then 50% of that whole tab is deductible. I can write that off. Okay, if I just found this out today, there's something called the Dutch treat. We commonly refer to it as going Dutch, right? So if we go Dutch and we all spend, we all just chip in on the bill and we all pay what we got, well, you can still write off 50% of your bill based on the fact that we sat around the table and had a discussion about preservation of wealth or whatever the home-based business is. It doesn't even have to be preservation of wealth. It could have been any other business that we eventually get into in the future. So 50%, it could be a ball game, a bar, a concert, a dinner, any form of entertainment. It's a great adventure. It doesn't matter as long as we are interjecting our business thoughts sometime during the day. Guess what? It is considered a write-off, up to 50%. All right. Now you don't even need to provide. It's kind of like the military with the travel vouchers. You don't need to provide a receipt if it's under $75. So you don't even have to provide a receipt. All you need to do is have a record of it. Don't even need to provide a receipt unless it's 75%. Unless it's 75 or more. All right. If you're entertaining at home. If you're entertaining at home, you get to write off 100% of everything you purchase for your dinner party. So guess what? Instead of us going out, guess what? We'll all go over one of your guys' houses, man. And guess what? All the food, all the drinks, everything that's purchased for that event, guess what? It's 100% write-off because it's in your home. So, again, man, like I said, a lot of this stuff you get creative with. I'm not talking about doing things illegal or not legit. You get creative and you get disciplined in keeping records, you could wind up saving a ton of money, man. All right, so deductions that are specific to preservation of wealth, right? All of these that we mentioned are specific to preservation of wealth because all of these, whether now or in time, will definitely be part of preservation of wealth. So all of that is, but kind of, just for stuff right now, I know all of us kind of just got started with it. So, basic stuff right now is, the membership fee. All right. So not only does the membership give you the access to buy the silver and gold really cheap, but you get to write off your membership. All right. Why? Because that's your business startup fee, right? Because having your preservation of wealth membership is what actually classifies you as a home-based business, right? So the coin of the month, right? The coin of the month. You can write those off as tools for prospects, like marketing tools, right? So if you want to show a family member what the actual coin of the month looks like, that's why I decided to go with the different coin of the month versus getting all Eagles, because I'm going to get a different coin every month. So as long as I got different coins, I'll be able to be like, oh no, I'm writing these off because they are actual different coins. I want to show people the coins that are available on Preservation of Wealth. I'm going to look more into it and get with my CPA, but I'm possibly going to purchase one of everything in the entire Preservation of Wealth menu and try to write that off systematically through the years. You know what I mean? So I got to do some math, but I'm going to look into that. So what else? Coin of the month, I already said that. Other marketing tools. So you wind up, guys, getting business cards, flyers, T-shirts, car magnets, a website. You're using your cell phone, your internet. Again, all of that can be written off. Get creative with the top 5 write-offs that I just talked about. You know what I mean? Just see how much juice you can get out of it. You know what I mean? The mindset is the big thing. I mean, just don't forget that taxes are the largest expense you have, and it's only going to get worse, man. It's only going to get worse. So you got to have the right mindset. A lot of you guys might be saying, oh, well, I don't see how I can involve preservation of wealth in every single one of these avenues. This is where I'm talking about the mindset, man. You guys got to get that mindset where this is a must, all right? If it's not preservation of wealth, if this is saying your thing and you're not liking it anymore, you want something else, any home-based business, all right? This is an absolute must. If you talk to any you read some of the books that I lent you guys in Afghanistan, any one of these guys are going to tell you got to have a home-based business. You got to have a business, right? And a home-based business being the best, especially with our situation since we're already tied up with jobs, all right? You got to have one, man. And that's part of the mindset where you got to say, all right, well, I'm going to really do this and implement this, because this in and of itself, man, is is another job. Just the savings that you're gonna get, dude, is like another paycheck. All right. So some final thoughts here, man. I mean, the average home-based business owner, the average home-based business owner saves an average of $11,000 a year in taxes. Guys who actually document their stuff and take it seriously and spend 3 to 6 hours a week, okay, on their home-based business, they're actually saving up to $11,000 a year. Dude, that's almost $1,000 a month, an extra $500 a paycheck. Is that not another job? Is that not like a second job? Of course it is, man. All right. So I told you that you didn't have to wait for your refund in the beginning. I told you to hang on to the end for that. So put it this way: if you calculate what you will be saving monthly, and again the average is $11,000. All right. Once you get started, you know what I mean? It's going to be less until you get to that number, but the average is $11,000. Now, if you calculate what you'll be saving monthly, okay? So let's not even say it's $11,000. Let's say it's $5,000, whatever it is. All right? If it's whatever number you calculate, you'll be able to save annually by keeping a record. And after your first year, you should have a really good idea. You can have a really good idea within a couple hours if you wanted to. Just sit down and figure it out. All you need to do is go to the HR department, okay? All you need to do is go to, in the military, you go to finance, and you can have them deduct less out of your taxes. So, for some of us guys that have other jobs that are really getting raped in taxes, okay? My taxes that I pay with the NYPD are just astronomical, man. I'm paying I don't even want to talk about it. It's way too much. And I got kids. So you guys who don't have kids, like Torres, man, I don't even want to talk about it. But anyway, what you can do is, if you calculate what you're going to save, you go to your HR department and you have them take that less amount out. You don't have to wait for your tax refund, okay? So if you figure you're going to be able to save somewhere around the $10,000 mark, you're looking at a couple $100 a paycheck, man. You're talking about getting anywhere from $300 to $900 a month in your paycheck. You know what I mean? That's huge. You don't even have to wait for your tax return. So this should definitely get your brain going on getting serious with it. All right. So, and everything is based on record keeping. All right. Which definitely needs to be a discipline that you develop and do it daily, all right? So, and again, if you want to be successful in a home-based business, I've been crushing an internet business and all type of stuff. Listen, you need to put in a little bit of time daily in order to build that discipline. It's no different than going to the gym, you know what I mean, and working out. Same principle, man. You got to put it in every single day, and you got to build a rhythm. And before you know it, man, it's like nothing. It's clockwork, right? So the easiest way I find in this record-keeping thing, again, your Preservation of Wealth membership came with this thing called TaxBot, which you get 50% off on, and you pay $9.99 a month. Usually it's $20 a month, all right? So $9.99 a month. I have it on my phone. I'll pull it up. But I have the TaxBot app, and the TaxBot app is great, man, because it records everything, man. You really don't have to do it. I mean, you want to get on I'll probably do a video just on TaxBot just to show you guys how it works. But, you want to add a trip for your car. The GPS automatically calculates your mileage, calculates the distance you drove, saves the date, the time, and then it comes with a notes section that you just type in, driving to so-and-so to talk about preservation of wealth. That's it. You want to add an expense, you hit add an expense, you take a picture of a receipt, and you could document everything right there. So, this app definitely has everything you need to just keep track of it. Then at the end of the year, man, it prints out a receipt, it prints out a whole entire tax report for you. And the guy who made this app up, he actually used to be an IRS agent that trained IRS agents. Then he got out and started his own business. So this guy knows what he's talking about, and the TaxBot app is all up to tax code. So it's audit proof, okay? So, and it also comes with a bit of education there in videos. And then the next thing is one of the best resources I found still to this date, man, is Mark Kohler stuff, which I had the books in Afghanistan, which a lot of you guys took, and his 2 books are good, man. It was All Lawyers Are Liars and What Your CPA Isn't Telling You. All right, and those 2 books is really what got my mind going on taxes. And The thing he has, I'll put a link with the email on how to get it, but it's called CFO in a Box. I mean, I bought it. I think it was like $300 or something like that. But this thing has a bunch of lessons in video form, categorized in any kind of tax savings, category you could imagine, whether it's real estate, whether it's home-based business. Every single detail I talked about here, he'll have broken down in the video. How to keep track of it, how to, and he updates it. So that CFO in a Box is good for life once you pay it, and he continually updates it. So basically, you're paying for, a personal CPA to tell you everything new that's happening every year. So you just go to the category, click on it, and he talks about it. He draws on the board. It's the whole nine. I mean, it's really great. I mean, I've been through it, and I'm like swamped with information. But it's good because it's categorized. So it's not like one big huge video that you got to sit down and watch. You just click and watch 5 to 20-minute videos here and there on specific topics. And the reason why I really like this guy, Mark Kohler, is because he's a lawyer, he's a certified public accountant, he's an entrepreneur, and he's an active real estate investor. So this guy's whole team is like dedicated to finding these loopholes. Like that's what his whole business is based on. He's not just a regular CPA that crunches numbers like most of the guys we go to. He actually dedicates his whole business to finding out every single possible tax strategy he can to save every type of person money, whether it's guys on the bottom or the mega millionaires. So, but I'll definitely put a link with this email to where you can go get that CFO in a Box. But that's priceless. And the best thing you can invest in, man, is your education. You know what I mean? Because you get that CFO in a Box, you get that tax spot, and you start studying, you start paying attention, and you start slowly doing this day by day, you're going to become real knowledgeable, and then you're going to be able to find the right CPA to help you out and be able to help you, save the most and come up with the best tax strategy for what your plan is. But anyway, I hope you enjoyed the video. I mean, I spent a good amount of time finding this information and trying to put it together, so I definitely hope it was helpful. It's a little bit long. I apologize, but it is what it is. Anyway, I'll probably do a video just on TaxBot showing you guys, and let me know if you even want it. If not, if you want it, I'll do it just so that way I can record my screen and you guys can actually see what's on there before you buy it. I think they might even have a free trial, but anyway. Anyway, that's all I got, man. Have a good one, and I'm definitely going to start getting more active with this preservation of wealth stuff, and I'm going to be sending out more emails to keep you guys up to date, and, see if we can make some money, man. All right? Have a good one. Bye.